you guys both being here. Thank you so much. You can take it from here.
Thank you, Dee Dee. And I will just jump in really quickly first. And um, I'll kind of segue into Susan's presentation. This is really her wheelhouse, and I'm excited for you to hear some of her story and then how she's applied that to strategies that we've used to help some of our clients. And I'll just say quickly, I'm Caitlin Muldoon and really proud to be a co-founder with Susan of Rising Femme Wealth. And I'm excited to be in this group as well. I think that it's really exciting to be investing in commercial real estate. It's really exciting to know about commercial real estate. I also am exclusively a passive investor in commercial real estate, and then I'm an active residential real estate investor. And those two things have really allowed me to do other things that I'm really passionate about. And one of those has been starting this business with Susan, where we can really work with other women and try and rewrite the narrative about, women being able to make financial decisions, and really making sure that we can work with women to help spread confidence, about financial literacy and long-term financial decisions. So it's really exciting to be here. I'm excited about this topic. I hope that not too many of you shy away from this tax topic. And Susan does a really great job of breaking down these concepts. And with that, I'll roll it over to my co-founder, Susan Geist.
Thanks, Caitlin. Yeah, let me go ahead and share my screen. Let's see. All right. Can you guys see the presentation?
Yes. Yep.
Right. So yes, I'm here to talk about taxes, but this will probably be a very different kind of tax presentation than anything you've ever seen before. So hopefully it will get you engaged and give you some ideas of how tax strategy can be implemented in your own life and why it's a good idea to start learning some of these tax strategies and tax planning and really take control of your own tax situation. So in the presentation, I'm going to give a little background on my tax story, and I'm going to cover using the tax bucket formula for tax planning. This is something I created, and it has changed my life with doing my tax return. I'm going to show you a client example. We got one of our clients a six-figure tax savings and increased their future net worth by over $1 million. And then I will show you how to integrate tax strategy into your own wealth building plan. All right. So disclaimer, this is not personal financial investing or tax advice. So this is for educational purposes only, and always consult the appropriate professionals about your own situation. All right. So about me, I've been investing in real estate since 2008. I have long-term rentals, short-term rentals, commercial. I'm a limited partner in commercial deals, and I do some private lending. So I was able to early retire from my W-2 job in 2022. Also was able to early retire my husband from his W-2 job. And this is based mostly on our real estate portfolio. We had been investing for a long time, and we got to a point where our investments were bringing in what we needed to live off of. So it's pretty amazing. I'm almost done with my enrolled agent tax certification. I have one more exam left to go. That will actually allow me to represent people in front of the IRS. If you get like a letter in the mail or you're being audited, I could actually help with that. And I started Rising Femme Wealth with Caitlin, who you just heard from, to help other women become financially empowered, financially confident, and be able to start living out their dreams. A lot of women, I think, get stuck in situations, and they look up one day and they don't even know how they got there, right? They're stuck in some corporate job that they hate. They're not seeing their kids. Like it's not what they dreamed for their life. And so we help them envision what it is that they want and how to start investing to get there. All right. So the two biggest wealth killers are inflation and taxes. Unfortunately, inflation, there's not a whole lot we can personally do a lot about, except maybe not buy as much stuff. Taxes, luckily, there is a lot we can do. So the reason I started looking into tax strategy in 2021, my federal tax bill was $137,000. And that was considerably more than I was making at my W-2 job. And I didn't understand what was going on because, yes, we had W-2 income, but we also had a lot of losses from stock sales. We had real estate losses that year from depreciation and expenses. And I didn't understand why those weren't offsetting our W-2 income. So I decided to stop looking for angels and start looking for angles. So after doing tax bucket planning, the next year in 2022, I got our federal tax bill down to $6,500. And this was with higher income than we'd had the year before. And then our 2023 federal tax bill was $0, finally hit that zero number on about $425,000 in income. And then our 2024 taxes will also be zero again. All right, this is a graph just showing, if you can save $10,000 every year on your taxes, which really isn't hard to do, how that compounds over time. So over 30 years, that will end up potentially growing to $1.2 million. So that could create your retirement just through tax planning. And I tell people that good tax planning can be equivalent to taking a second job. You can make that much money doing good tax planning. And your tax savings are fueling your long-term investment growth. All right. So something else I hear from a lot of people is, oh, but I already have a financial advisor or a CPA. So why would I need to do any tax planning on my own? Well, what you're typically going to find is that if you go to your financial advisor and you say you want to do tax planning, they're going to say, go to your CPA. You go to your CPA and you tell them you want to do tax planning, they're going to tell you to go to your financial advisor. So you're going to get stuck in this sort of endless loop there, right? So your CPA typically is just taking your numbers, putting them in their software, and giving you your tax return. That's most of the time they are not doing tax planning with you. They are not the ones that are going to be buying real estate for you or investing in tax advantaged accounts for you or starting a business for you. Like, they're not in a position to do any of these things that can save you a lot of money on taxes. So it's really in your best interest to learn about tax strategy, learn where these deductions are, and figure out how you can take advantage of them. And you can still have a CPA, right? You can still take all of your paperwork to the CPA and they'll do your tax return for you. But then the power is with you, right? Is to figure out how you can actually get your taxes lower. It's usually not in their best interest to try to lower your taxes. It's more work for them, right? And it's also more of a liability for them, right? So they're fine with you paying the top level taxes, right? And they tend to make more money too, right? So it's really in your own best interest to learn about tax planning, at least on a baseline level, so you can understand what's happening. All right, so let's get into the tax bucket formula. And the reason I put this together, I wanted an easy way to visualize what was going on with my taxes. So the way the IRS works is they separate your income into 3 income tax buckets. So there's active income. So this is going to be like earned income. We've got portfolio income. This will be like mostly paper assets and passive. So here's more of a description. So in this active bucket, we'll have like W-2 income, 1099 income, like contract income, hourly income. If you have a small business, that income will be there in the active bucket. If you have a short-term rental that you self-manage, you take active participation on, that will be in your active bucket. If you're an active house flipper, that will also be in your active bucket. Roth IRA contributions, and then even withdrawals from your 401k, right? Because that was originally your salary. So that's considered active income on the way back out. And then portfolio income, that'll be your stock and bond sales, any dividends you get, interest. If you're doing owner financing on a property, if you're invested in private debt funds. So pretty much anything, if you get like a 1099 INT, an interest 1099, that's going to come in your portfolio bucket. Any sales of non-business assets. So if you have like a collectible car and you sell that and make a profit, that can be in your portfolio bucket. And then our third bucket here is the passive bucket. And most real estate is going to end up in this bucket. And it's actually an advantage, right? That real estate income is in this bucket because you don't have to pay self-employment tax on any of that. But unfortunately, it doesn't offset active income. And that's where a lot of people get tripped up. That's where I was getting tripped up. But this is going to have your rental real estate income, your syndication, most of your syndication income, if it's reported as business income, any really passive business interest that you have will be here. And if you have a short-term rental, but you use property manager, this will be over in your passive bucket. So let's take a look at how this tax bucket formula works. So the goal is to figure out what types of income you have in each bucket, and then figure out what deductions apply to each of those types of income. Because once you start pairing your income in with your deductions out, that's when you can really start reducing your taxable income. All right, so let's see it in action. So I have a client example here, and this one is a little bit complicated, but I wanted to show this one because it incorporates a lot of different elements of tax planning. And there are some things that I'm going to mention that you may not be familiar with, and that's okay. My goal here is to just show you how this works, so you can start getting your head around how the tax buckets are set up and how you can take advantage of them. So I'm going to talk about a married set of clients that we had, Sam and Shelby. I changed their names for privacy. They were filing jointly. So their income came primarily from their W-2 jobs, which is in the active bucket, and 3 rental duplexes, which is in the passive bucket. So when they came to us, they were in a position where Sam wanted to leave his job to spend more time with their kids. So when we started talking to them about their long-term wealth plan goals, a big one, of course, was Sam getting to leave his W-2 job to cover more of the household and family responsibilities, to relieve Shelby a little bit, but also to maintain financial security for the family, right? I mean, that's a big deal when one parent stops working. So we also had them identify, well, what are their main values that they care about in life? What are the things that they want to prioritize? And they identified family, health, and financial security. So let's take a look at their buckets. So first, this is their situation when they first came to us. So Sam and Shelby were both still working W-2 jobs. Shelby was making $200,000 and Sam was making $120,000. They had about $10,000 of dividends coming in and about $150,000 in rental income from their duplexes. So that just baseline, their income coming in was $480,000, which puts them in the 35% tax bracket. So it's pretty high. After the standard deduction, their tax due was $106,000, which is a significant chunk of their income. But we knew that Sam wanted to leave his job. So we started trying to figure out, well, what kind of tax situation would work to still preserve your income. So first, we looked at the low-hanging fruit. So we were going after like the tax advantaged accounts. So we took Sam's job off the table because we knew he wanted to leave, but we went ahead and had Shelby max out her tax advantaged accounts. So she was maxing out her 401k, her health savings account, or limited expense FSA, had them do the $3,000 max of tax loss harvesting, and then take the standard deduction. And then portfolio, we're going to leave alone for right now. And then over in the passive bucket, we had this rental income, right? So we wanted to make sure they were taking advantage of all the deductions that they could take advantage of with rentals. So that they were taking all the depreciation that they could, all the expenses that they could. And then they also invested in a commercial real estate syndication. And so at this time, there was still 100% bonus depreciation. So they were able to take that bonus depreciation up front and get a $200,000 write-off on that, which is a huge advantage of investing in these commercial real estate syndications, especially when the 100% bonus depreciation is available, which I think it might actually become available again later this year. So we'll see. All right. So wouldn't it be great if we could take all those things in the passive bucket and move them to the active bucket? Well, if Sam is leaving his job, he can take over management of their real estate properties. And if he meets the criteria for number of hours and amount of time worked, he can obtain real estate professional status. So that essentially takes their real estate and makes it a business, makes it an active business. And they can also do a grouping election with those syndications to group them into their real estate business. And at that point, when he gets real estate professional status, they can take that whole set of real estate and essentially dump all of that into the active bucket. And this is a strategy a lot of couples will use. If one of them is not working a W-2 job and one of them is working a W-2 job, real estate is so powerful because you can get this real estate professional status and then start offsetting that W-2 income with all of the tax advantages that real estate provides. So let's take a look at what this did to their buckets, right? So we took everything from the green bucket and we dumped it into the red bucket. So now we have the rental income over here in the red bucket, but we also have the rental losses and we have the depreciation from the syndications. So we've got negative $32,950 in the active bucket. We still have our $10,000 in dividends. So what are we going to do with this negative number? Because that's not going to help us on taxes, right? We pay zero taxes, but you can carry it over, but they're not going to give you a check or anything, right? So what we encouraged them to do was to do a $32,000 Roth IRA conversion, which he was able to do tax-free. So typically with a Roth IRA conversion, you're moving from a traditional IRA where you have not paid the taxes yet, and you take that money and you convert it to a Roth IRA and you pay the taxes at that time. And in this case, there were no taxes due, right? Because they had that loss to offset. So essentially, Sam was able to put this money in his 401k originally tax-free. He was able to roll it to a traditional IRA tax-free. And now he's able to roll that to a Roth IRA tax-free, and he will be able to take that out tax-free. So that money was completely tax-free for him. All right, so let's take a look at what that does. So we add in this $32,000 Roth IRA conversion. We also ended up doing some tax gain harvesting with them. So since they were already in the 0% tax bracket for active income, we got that zeroed out. Portfolio income, a lot of that runs on a different set of tax brackets, right? So you're going to run on the capital gains tax brackets, and the 0% capital gains tax bracket is a lot bigger than the normal income tax bracket. And so for this year, it's, I think, between 0 and $96,700, it's 0% tax. And so they were able to actually realize some of their stock gains without paying any taxes. So they were able to sell some stocks, realize those capital gains, and not have to pay that tax bill. So essentially reset their cost basis a lot higher for free. So they went ahead and did that. And so if we look at how this turned out, so their previous tax burden, they were paying $106,000 on $480,000 of income. So since we got their tax bracket down to zero, their approximate tax due now was $0 on $462,000 in income. So their income went down just a little bit, but their overall net take home went up considerably, even though Sam left his job. So that is the power of good tax planning. So if they take that money, that $100,000 that they've saved now, and they invested in the market, after 30 years, they're going to have over $1 million. So they've just added over $1 million to their future net worth. They're in an overall better net financial position than they were before. Sam has more family time available. He's able to stay home and watch the kids. Shelby was in a much better position. She could focus on her job. She didn't have as many of the household duties on her. They contributed and now can withdraw $32,000 in retirement funds completely tax-free. And then they also are showing lower income, which gives them benefits for the Affordable Care Act, the FAFSA, and Medicare, none of which they needed at the time, but that is a useful benefit of tax planning and getting your adjusted gross income lower. All right. But tax strategy is just one piece of a much bigger picture, right? So there are more questions. What will you do with the money that you save, right? So if you save a bunch of money on taxes and then you go spend it on a fancy car, that's probably not a huge advantage. If you take that money and invest it and you use it to grow your wealth, that's much more useful to you in the long term. So how will you reinvest this money to build lasting wealth? And do you have a clear long-term plan to reach financial freedom? So tax planning is just one pillar of a bigger wealth building framework, one that aligns your finances with your long-term vision. I often have had clients come to me and they just want to do like a one-off tax strategy session. And it's actually really challenging to do because you shouldn't let the tax tail wag the dog, right? So yes, there are things you can do. There are a lot of really interesting deductions and tax strategies, but if they don't fit with what you want for your life, then it's not something you should be doing, right? I hear a lot of these CPAs telling people to go buy big heavy vehicles, right? Because it's a business write-off. Well, okay, if you spend $100,000 on a car you don't need to save $10,000 on taxes, that was probably not a good financial move, right? And like the short-term rental loophole, that's a great tax strategy, and I've used it, and I've saved a lot of money on my taxes with it. But a lot of people don't want to manage a short-term rental, right? I mean, you suddenly are in the hospitality business, and a lot of people don't like that. Same with like owning a business, right? That's another great way to get tax write-offs, but there are a lot of people that just don't want to have a business. So it's a much bigger story, right? And you really need to incorporate tax strategy into your full long-term wealth plan for it to make sense. And so here are these 4 pillars of a long-term wealth building plan. So we've got the mindset, the values and goals. What do you actually want your life to look like? Your spending and saving, right? So your spending needs to be under what you're making so you can start saving and you can start investing in these assets that'll help you in the future. And then the investing piece, what are you going to put this money in? And then the tax strategy is also a puzzle piece that fits in with all of this roadmap. All right, so I'm going to show you this example. This is where a lot of people who retire early are trying to get to. And this actually looks very similar to my personal tax plan. So once you're not working a W-2 job, right? Usually most of your income is going to be coming into the portfolio bucket because you'll be drawing down from your assets, long-term capital gains, you'll be getting dividends. And so this strategy is trying to maximize that 0% capital gains tax bracket that I was talking about. And this example is for a married couple with 2 kids. So in this case, they were doing a Roth IRA conversion of $30,000 to offset the standard deduction. So that's an easy way. You can just take that standard deduction. Active income is a great way to offset it. So just maximize that out. We get down to 0. And then in the portfolio bucket, I'll show you how that works in just a second. And then over in the passive bucket, we've got real estate income coming in, but it's being offset by expenses and depreciation. And that's true for a lot of people who are in real estate. Once you start getting a lot of properties, you will typically end up netting out close to 0 if you've planned it correctly. So for me right now, I've got over $500,000 in passive carryover losses that I'm carrying over every year that are offsetting my real estate income. So that bucket for me nets out every single year for now. But this portfolio bucket, right? So in this case, it's 0% tax up to the $96,700. And then the way we get rid of the rest of that is it's 15% tax up to that $123,366, but they get a child tax credit for 2 kids. So that tax bill would be $4,000, but you get $2,000 per kid. And so that wipes that out. And so in this case, they're paying $0 in tax on $403,000 of income. And this is what I would say most people who have retired early are doing some version of this as a tax plan. All right. So common mistakes investors make. So the first one, of course, is ignoring tax planning entirely, right? A lot of people, like Didi was saying, they just don't even want to think about it, right? Taxes are just the bane of their existence. But it's worth thinking about and figuring out how you can take advantage of, especially advantage of the loopholes that the ultra wealthy are taking advantage of. For me, one way I look at this is, here we have these billionaires that are paying like nothing in taxes. And this is our way as like the common people of being able to take advantage of a little bit of what they're doing, right? We can sneak in there and use their tools and tricks too, right? And then another one is short-term tax planning, but no long-term wealth vision. Like I mentioned before, investing in things solely for the tax benefit that don't really make sense. Another one is like oil and gas, right? A lot of people will invest in oil and gas because it actually, the way it's set up is typically a write-off in your active bucket. But oil and gas also oftentimes will lose a lot of money. So again, it's another one of those plays where you may invest $100,000 in oil and gas to save $10,000 on your taxes, and then you lose that entire $100,000 in your investment. So tax planning is really part of a longer wealth vision that you have to incorporate it into. Another one is lowering taxes, but no reinvestment strategy. So what are you going to do with your tax savings, right? Where are you going to put that money? And then not knowing their actual freedom number. So what is the amount of money that they need to live off of if they're no longer working a W-2 job, right? So it may be $1 million, $2 million, right? But it's worth figuring out. And there are a lot of financial freedom calculators online where you can run your numbers and it will spit out the number that you would need. So what if you had a clear framework for turning investments and tax savings into financial freedom? Well, that's where the long-term wealth plan comes in. So it integrates tax strategy and investments and your personal goals. And this is something that I think is missing from a lot of financial advisors that you go to, right? It's, they have their set of investments that they put everybody's money in. They're not really thinking about you and your personal goals, whether you might want to retire early or cut back on work, whether you care about like values investing, like whether you want to be invested in more like women-owned businesses, things like that, right? And so we really dig in with our clients into what do they want their life to look like, what are their values and beliefs, and how can you incorporate that into your financial plan. So it really helps you align your money with your lifestyle vision and helps you make intentional wealth decisions. So putting together a long-term wealth plan, this gives you a document that you can come back to for many, many years in the future, right? And look at it and say, okay, these are my values, these were my goals. Does this current financial decision align with that, right? So we have clients come to us that are, say, considering taking a promotion, right? And then, so we'll tease out the values and priorities that mean a lot to them. And, it'll turn out to be their family, having time for personal care, health means a lot to them. And nowhere on there is getting a promotion that's going to make me work twice as many hours, but pay me a little bit more, right? And so I think it gives you a good framework to run your decisions through moving forward. Does this make sense? Does this not make sense for what I want my life to look like? So we have a new program, our Wealth by Design program. And so this is what we help women with. So we've been running it in person. So we've actually transitioned so we can offer the courses online with in-person once a month coaching, because we found a lot of women wanted more flexibility with that. But this helps you actually design a life of intentional freedom, grow your wealth faster through education, and become more confident with your financial planning and your tax planning, and really figure out what it is you want. And I will show you with myself what financial freedom looks like for me. So this is the past 2 years of my life, is traveling all over the world with my family. So we're, climbing sand dunes in Namibia. We're on camels in Egypt. We're climbing a volcano in New Zealand. We're in Patagonia. We are in South Africa, Japan, Maui. I'm in Germany for the Taylor Swift concert. There's Mount Fuji. We're in Botswana with that lion. Like, we were all over the world. And so it's just really amazing when you can start to take control of your financial life and have that lead into your real life, like what you want to do, how you want to live, and be able to design something like this for yourself. And Caitlin and I are proof that you can do it. Caitlin also retired herself and her husband from their W-2 jobs by investing and building a portfolio that would sustain them. So this is more about our program. So it includes recorded educational webinars. So you learn about investing and tax strategy and how to identify your values and goals and risk tolerance. And each lesson comes with fillable worksheets that end up creating your wealth plan. So it's easy. It's like step by step, really easy to just fill it out. And then you have this deliverable, right, at the end, your full wealth plan that you can keep going back to in the future, with even, more recent financial decisions, and say, okay, this aligns with what I want to do, or this doesn't. So yeah, here is a QR code you can scan to learn more. Yeah, and that's all. I hope you guys enjoyed this. I love talking about tax strategy. So I hope you guys got something out of the tax bucket formula, because that really changed my life when I started looking at my taxes like that. And I hope it changes your life too.